Hi and thanks for watching. It's Jason from iChoice. This is a little clip I want to put out to medical professionals, but it can relate to other people in business. The reason why we come to Specialise, over my years in the banks at Westpac, NAB and St George, I did deal with a lot of medical professionals, and the main reason why is because I've got a good understanding of tax legislation and asset protection and how lending structures mashes all that together. I just want to give you one little quick example. I met a dentist who had a $5 million home and a relatively small home loan. And she had a $1 million loan out to, Medfin for a dental practice. Now she was servicing that over 10 years and she'd already paid about $200,000 off. And I just expressed to her, why are you paying that down so quickly when you're carrying this owner-occupied home loan that you're servicing with your after-tax dollars? It was still a sizable loan of about $1 million. So what I did was actually refinance that Medfin finance to be secured by her home and actually got an owner-occupied rate against that. Some of the banks do that. So hence, we pushed it out. I think we made it interest only for a couple of years, but at least for a 30-year term, so that you're not quickly paying off the tax deductible debt that you get some tax benefit from, and she has the ability to pay off her home loan, which is of course the loan that she's servicing with her after-tax dollars. There is a negative to this. I mean, obviously she's chewed into the equity of her property, so it doesn't suit everybody. It depends on, one of the questions we always ask is, what's the 5 years plan? Where do you see yourself in 10 years? Because it might be worthwhile doing that and protecting the equity in her home for future purchases. Some of the banks will lend up to 90%, as you know, for medical professionals, but some banks will lend all the way up to like $7.5 million. Some kind of cap out at $2 or $3 million at 90%. And it's really interesting for spin-offs in the medical industry, like chiropractors can get 90% loans with no LMI from ANZ, and pharmacists cannot. But then at St George Bank, pharmacists can, and chiropractors are not included on their list of medical professionals. So, it's really important to get all that stuff right. When it comes to asset protection, and I love talking about self-managed super funds, and I'm sure I make lots of videos against that. This building was purchased in my self-managed super fund last year, and I much prefer paying 15% tax on the $90,000 rent that iChoice pays rather than 45%. It saves me about $27,000 a year in cold hard cash, and sets me up for a $90,000 retirement income in 13 years, tax-free in today's dollar terms. But when it comes to asset protection, unit trust, the negative to buying in unit trusts, a lot of doctors have unfortunately bought their surgeries and dental practices and medical centres in unit trusts or in companies, which is a real shame because it doesn't give me the ability to slide it in super in New South Wales anyway without paying real stamp duty. The stamp duty rate is normally $500. In Victoria, the rules are a little bit different. You can slide it into super if it's in the same beneficial ownership of your personal names, but no cash is really allowed to change hands. So unless you really bring forward the $300,000 between you and perhaps if you have a partner, the 3-year bring forward rule, you can do that. Might work in rural Victoria, but probably won't cut it in Melbourne. So when it comes to discretionary trusts, I know a lot of doctors just pay a lot of tax and they like their assets being protected. So I love talking about that. Land tax-free thresholds is something I talk to everybody about. Potential capital gains. We need to know some more specifics about medical professionals before we can go off and offer too much advice. But asset protection, tax minimisation are the most important things. Of course, the interest rate. I mean, we have crazy times now where any investment debt or business debt or commercial debt that you can have secured by your home can get owner-occupied rates, which at some banks is under 3.6%. It's quite normal for me to refinance $3 million deals and save 1%, which is a $30,000 a year saving. So thanks for watching. We're contactable here in Sydney on 02 9743 0000. We do service medical professionals all around the country. We have a room dedicated for Skyping with our clients. So I would love to have a quick chat with you one day. Thank you.